it's essentially called like a stage channel where, one person's supposed to be a speaker, so maybe I was not on the stage or something. But regardless, what I talked about is I plan on going over my investment portfolio today, likely, because I haven't really broken it down detail by fund. So I was thinking of going over two of them. I have four portfolios. I'm going to go over only my individual and Roth IRA, most likely. But then I also asked if any students want to send their data and I can go over and look over it. So I already have one person who has, and we're going to go over his in a little bit. But if any of you also want to send it, I can maybe push my portfolio out, do it another time, and kind of focus on that if I get too many requests. But otherwise, I'm going to go through some of my setups again here because you guys can hear me initially. And then maybe go through my portfolios, and then we will dive into looking at some student data. So that's probably the plan for today. Then I'll have to figure out webinar channel later. But I do have USD JPY, just because very, very clean and aggressive sweep on liquidity here, followed by the break of structure. So I do really like this setup. I'm working within this general range. And then I do also like positions where we're seeing a large scale run on liquidity like this. Oh my god, now I didn't share screen. I'm a mess today, guys. There we go. So I do like positions with a large scale sweep like this. Let me just make sure the stream should be going now. But yep, there we go. It's just taking a second to load. And I do expect some sort of larger scale reversal here on USD JPY when price comes below such significant liquidity points like this. We just sweep that, and then we just sweep this lower time frame liquidity. Realistically speaking, I see USD JPY even having the possibility to run this overall high. And it's very, very clear USD JPY moves fairly often in liquidity like this, and it's very, very high volume due to the discrepancy between USD and yen. So I do expect some very, very bullish price. With that being said, it might be unlikely that we get a retracement all the way, but nonetheless, I have my order set here. And then I have pound NZD, which was, I mentioned previously, you guys probably couldn't hear me. This did fail to have a good sweep on liquidity. This is not a typical trade that I will take. But, human error or just me not necessarily paying attention when placing the order. So it was set, and then obviously a break even on the position. We came very aggressively into profit and then reversed very aggressively as well. So I took a break even on this one. And then I had pound CAD, which was a very, very aggressive loss here. And I mentioned this one is tossed onto my trading journal for the month of September. Even though it did hit in October 1st, I was journaling it when it initially was placed. So this is technically my last trade of September for my journal. So not too bad. I still had a really good month in September overall. And I'm going to actually have a YouTube video that should be coming out, I believe. Let's see, it might be either the 7th or the 14th. I might have to check. I have them scheduled out. But I'm going to be going over my whole journal for the month of September. Is there any other setups that you guys see or want me to look at? Because I have not brushed through these pairs yet. Yeah, it definitely was a tougher week. I personally did not trade too much this week. I made a lot of content for YouTube and kind of scheduled it out for the next week or so. So I really did not trade much this week. 4 trades this week. Let's take a look at them. So NZD USD, someone mentioned. Assuming this position here, I did mark something up similar, but I personally, like I said, I did not really trade much this week, so I did not have positions on. NZD CAD. I don't trade NZD CAD, so let me pull that one up. I just don't happen to have it on my watch list. Yeah, almost identical setup to NZD USD. Not a bad position. Impulsive sweep, break of structure. Definitely a little bit more resting liquidity when I do view something like this with lows here, here, and here. I try to, be adamant about, even though this might look like a sweep in a case like this, you got to be aware of all the lows that are resting within a general area in price action, and that more likely than not, liquidity is going to be drawn to that. It's kind of similar when you're looking at NZD USD, when, yes, this might look like a sweep, but a lot of relative equal lows in this general area. compared to some more considerable areas of liquidity that we might see swept. For example, something like this, where it's a very deep retracement below that range, but we also have, just this general consolidation, a good push through it, and then the break. So a little bit close there. Let's go pound. Oh, pound cat. I took that loss as well. The one that you mentioned in Euro NZD. That is another pair. Oh, I was gonna say I don't trade that one. Okay, I see. It's a sell position. Honestly, looks like a pretty good position to me as well. We have a great sweep on liquidity here. A break of structure. Like so, and then from this high to this low. So not a bad setup either. If you're trading within this range. So honestly, I don't see many issues with the losses. And then Cosman said AUD CAD. Gotcha. That's another nice one as well, actually. I did not spot this one, but I like this one. I like the range that we're kind of working with here and how it's more significant consolidation in this very, very strong candle that goes and sweeps that, followed by the very high volume for the break of structure. So I do actually really like this one. Let me mark it all out. And then the sweep on liquidity like so, and then the fair value gap right around your entry level. I like to mark it sometimes. And from the low to the high, 3R. So this is a pretty solid setup in my opinion. I actually really like this one. AUD USD, someone mentioned. Can you see the AUD USD and Euro NZD loss I took? Let's see. AUD USD. This one, I would argue, did not sweep liquidity. Very similar to how I mentioned a weak sweep on liquidity and NZD USD and NZD CAD. This one here did not necessarily sweep anything. So I do think that is something that I would not have, it wouldn't have followed my personal rules. I would not have been able to take this if this is the range that you are referring to. And even then, with all this consolidation and these lows here, 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 and here, even if it did come down a little bit lower, it's going to be forming relative equals with a lot of these levels and just really kind of showing that there's a lot of liquidity that most likely price is going to be driven through. So yeah, I do just think, realistically speaking, on these AUD and NZD pairs, we're just kind of seeing a retracement week and, some tough losses there, but it's nothing that I would be too worried about. The only thing is, if you have like 8 setups on all of these pairs and they all reversed on you, it's going to hurt. But that's why you should be weeding them out by proper positions. For example, like this one did not sweep liquidity. I wouldn't be taking that. NZD CAD, in my opinion, is not a great sweep on liquidity either. So it helps kind of limit those trades a little bit. What was with USD CAD? Great question. I don't necessarily know what you're referring to. I'm not sure if you're referring to, I didn't like the BOS. Is that for NZD CAD, Esteban, that you mean? You don't like the BOS here? Yeah. Yeah, the BOS is definitely a bit weak here, especially for a much larger range that we're looking at like this. Whoever took it, I don't think it's a bad trade at all. And this is kind of why, in my opinion, the break-even rule kind of acts as insurance, is even if you're on the wrong side of the market here, you may be able to see that 1RR retracement. Price could do something like this, come to mitigate this break of structure in that range, and then run. But also, very, very possible that it could just run TP here. But I do think when you're looking at such a large range like this, a very weak break of structure isn't too convincing. I'd probably want to see a little bit more price action below that low just to confirm that it was a shift. But otherwise, I don't think it's too bad of a position. I just personally don't think I would trade this because of that break of structure either. Let me double check and make sure I went through most of the trades I'm seeing in chat here. Yeah, AUD CAD. AUD CAD as well. So a couple people have that AUD CAD trade, which I think is a pretty solid one. I like the impulsivity of it. That's one of the main things I focus on is, we see this ugly looking range here, but then you could see how, very clear this one candle that sweeps that liquidity is, and then a break of structure following, and then Euro Chef. Let's see here. if you're referring to the buy position, I think that's a solid buy. It's just definitely a large range, but I don't see any sells in here, so I'm going to assume what you're referring to is this buy position here, which I do think is pretty solid as well. It's a bit of a large range, but I do think, like I said, I have not traded too much this week, so I will not have a lot of these positions, but honestly, if I did go through price, this is probably something I would have had a little bit of a longer term position here in a larger range, but I do really like this one. I also like, so number one, we have the sweep on liquidity of the previous range. We have a strong break of structure and a good range here. I would argue fair value gaps are a little bit weak here. Yes, there is plenty in the range, but for such a large range, there isn't many that stand out. This could be, arguably a daily time frame position. It looks very similar or within that general, it could be anywhere between that scale in my opinion, but I still think it's a great setup. We have plenty of internal liquidity or inducement before the entry as well. Just definitely a bit of a larger range in my opinion. So this would have been something that if people said it would have been, weeks ago? What is this, September 10th? So yeah, this isn't something that I personally was looking at. I don't see as my EuroCAD break even that I took. Actually got a BE on that last sell. Okay, so if you're referring to this one, I definitely think that's a bit of an aggressive range, especially with no liquidity sweep here. If you're referring from this high to this low and how you would take a break even here, it's definitely aggressive. I don't think it's a bad position, but I try to avoid ranges that are very small like this because I find that they're much less likely. Compared to, if we look at some of these larger ranges like USD JPY, a good example here is I personally am interested in this range to this high and low. And there was some people who last week were taking stuff like this, which to me is just very, and even this one, which to me is just very aggressive, very small ranges. And I personally found that those don't work too well for me. For some people who may be willing to take more losses but take more trades, it could work out. You just need to test that. I personally did not have good returns when it comes to like sweep of liquidity, break of structure, and trying to take buy positions that are very small ranges like this. So I tend to avoid them. When you miss a trade like AUD CAD, you go and buy stop in that case. I personally, the way I operate at this point, if I miss a trade, I could buy this like right now. But if it is in my zone and I can get a good entry on it, so right now, for example, if I went to place this, my broker would fill me like here maybe, and it's just not worth it to me to cut down my RR, get in late. If it was down here, you might be able to get a good market buy entry. I try to limit the amount that I do that. From a psychological standpoint, I find that more times than not, if I am rushing into a trade or market ordering that trade, there's a reason I may not have spotted it within the previous couple days or whatever. And it's personally, if it's not standing out or jumping out at me, I don't prefer to mark it in. Just psychologically, I find it works less in my favor than it plays out. So I'm going to let it be, but I do think it's a great setup. That is something I definitely would take, but I haven't been trading too much this week. I've been making a bunch of content. Actually, I'm scheduled out to like November right now on YouTube, so there'll be new videos every week, every Monday, at 5 p.m. my time. But I think this is a great setup. If I was trading this week, this would definitely be something I was involved in, and I do kind of like that larger Euro Chef range, but not something I personally saw either. Is there any other setups that you guys see up and coming? Let's see here. Nothing really jumping out at me at the moment. Very ugly volume in a lot of these. I wonder why I had this labeled as a target. So random, but I do like this one. I'm going to drag it up just so I can watch it. And then Euro AUD, someone said. Let's check that one. Honestly, I would not touch this price action. Assuming that you're referring to this high to this low. But I just personally, if I see something like this, it's very ugly and low volume. So I would personally avoid it. but realistically speaking, you could get filled here and it could be a great trade. It's just not something that fits my preference. I like to see these very clear ranges. Like you can see USD JPY here with great volume, good movement, very impulsive bearish move and impulsive bullish move versus, the price almost here is just kind of crawling its way down in this bearish trend. More likely than not, if we look at a higher time frame, it's going to be working its way towards a point on liquidity. So, for example, in my opinion, we're going to make a run for this point of liquidity here. And very likely when we see price get below that, we're then going to see a very aggressive bullish rally. Right now, the price almost has, I relate liquidity to gasoline or fuel a lot in the course content. And when you see price kind of really dying out like this in very low and slow volume, it's just simply out of liquidity. And, there's not very many positions being put into the market. So it's going to gravitate towards that point of liquidity on the higher time frame that has a lot of orders in the market. And then it's going to get that, ability to kind of go and move price with a lot higher volume. Euro NZD was clear. This one, yeah, I had this one marked up. Once again, like I said, I haven't been trading this week. I think I went over this last webinar maybe, but I think that was a solid setup too. AUD NZD long. That's good too. I prefer to trade a little more range based, and when I say range based, I mean a very clear structural low and high. I found if price is running very, very far, I've mentioned it a few times now, but my soft rule is if that 50% is exceeding the break of structure, I'll typically avoid it. But honestly, I don't think it's a bad setup. We have a great fair value gap right around that entry level. It's just for me, the range has been extended a little bit longer than I would like. I think I would definitely be narrowed down to these general ones for this week. Well, this one was last week, so let me put that away. That one was last week. And so I have these two at the moment. USD CAD. What else? Not too much else that I was seeing overall. Pound US dollar is in a pretty good area on the much higher time frame, a little bit too large of a range. And that was Euro. Euro CAD, it took that break even last week or the week before, I believe. And otherwise, I don't see too much going on. This isn't too bad of a position either. Having something from here to here with that break of structure on AUD JPY and sweeping liquidity, it's just once again these lows. When I see a lot of lows consolidating in the same general area, typically find it's less likely, but there's also not really a great fair value gap here anywhere near entry. I don't trade NZD CAD, so I'm going to remove that one at the moment. This must be a different data feed. What is this, FXCM? Yeah, let me replace that works.com. How many trades max you take per week in this type of weeks with many setups? I typically, if I hop on the charts and I see 4+ setups, typically I'm narrowing it down to 2 to 3. And it's basically, for example, I mentioned the NZD Chef, or sorry, I think it was NZD USD, where, I didn't necessarily like the sweep on liquidity here. It wasn't very impulsive, and it wasn't very, wasn't a lot of liquidity or clear liquidity in the markets. If I can see setups like that where I'm like, okay, sure, it follows the rules, but this is not really a quality liquidity sweep, I might avoid that one, and then I would have avoided the NZD CAD one. And it's just that minor narrowing down of positions that over time, one, I'm a little more comfortable risking, about 6% or 4% at a time on my personal account, because I do risk 2% per trade. Any higher than that, and I'm going to start avoiding positions. I don't want to be risking 8 to 10% of my account per week. The other option is if someone wanted to, they could lower their risk or split their risk in half. If you see 6 positions or 6 setups, you can cut your risk in half and take all of them. That's another option. I know people do it that way. Works out great as well. And it kind of helps with not having to narrow down trades as much. And it will kind of hurt the loss or, take away the burden of all the losses if they do add up. You would have taken, half the risk and half the losses on those NZD and AUD pairs that did reverse this week. That is one way to do it too. Let me make sure I did not miss any questions. And then, okay, so and then Euro, NZD, I think I went over all of these. All right, so what is your average win rate? Yeah, so typically it depends with break even. So I like month by month, it can definitely vary drastically because I typically log my journal month by month. So September, I took, I think it was 8 trades, and had a 64% win rate around that area. I forget exactly right now my journal. I went over it in next week's video. Yes, technically it would be insane, but I count break evens as wins. So if you really, scrape out some of those break evens, it would realistically be around that 45% level, which is where I find most people tend to fall with this strategy. So yeah, break evens are included in my win rate in my journal. And the reason why is because on my MT4, well, first off, I think break evens should be a win overall. I don't want people to psychologically skew themselves. Some people look at break evens as something bad that happened, especially, if you look at something like Euro CAD, where price came very, very close to TP and then broke even. Some people will get more and super upset about something like this when in reality, this was never your money to begin with. You risked capital on a trade in a $7 trillion market. You put your capital up at risk. You had a proven statistical chance that this is more likely to risk or more likely to make you 3x your capital versus lose 1% of your capital. And price ran up. This was never your money to begin with until the trade is closed out. And then it ran to break even and you lost no money, but you had the great chance at 3xing your capital. 100 out of 100 times, you should be happy about that. The issue is from a psychological factor, people take these very hard. They're like, oh, I was so close to making that 3%, 6%, whatever it is that you risk, and taking it much harder than it needs to be. Please mentally make yourself more comfortable with understanding that break evens are a great thing, not a bad thing. Some people put them in the same category as a loss, and I can promise you losing streaks will be so much harder if you're looking at break evens as losses. You have to look at them as a win mentally. Even though it didn't increase your account, you had a fantastic chance at a winner without losing capital, which is a win in my books every time, because people will take -1, -1, -1, and then they'll take a break even, and then a -1 and a -1, and they're going to cry about a 5-trade losing streak. Yes, you're down -5%, but I could show you 4,000 pieces of my backtesting data that had a 5-trade losing streak. In fact, let me pull up an image from this week if I can find it. You know what? It's on my phone. I'm gonna actually send it in chat here because I know it's saved on my phone. Can I enter the trading channel chat from? Okay, probably not. I'll do it in main chat. It's gonna be that image there that I sent in main chat. I'm gonna pull it up on my screen here. This is something I really want some people to dive into and, really break down the probability. Like I said, the majority of us probably fall within that 40 to 45 range regarding win rate. 35 and 30 are both profitable as well. Keep that in mind. So we'll talk about from the 30 to 45 range in general, and we'll just call it 40 for now. It is a 100% guarantee that you are going to lose 2 trades, 3 trades, 4 trades, or 5 trades in a row in a 50-trade sample. So like I said, this 5-trade losing streak that some people take really hard when I said -1, break even. Technically speaking, on most accounts, the break even is null and shouldn't be included in data. But mentally, you want to take that as a win. But I also, where is that? Right here. But at the same time, it's the idea that it is a 100% guarantee that in a course of 50 trades, you are at some point going to have to go through a 5 and even a 6-trade losing streak. But the issue is when something like this or this data is laid out right in front of people and they eventually hit that 5 or 6-trade losing streak. Justin, my journal is, I actually have a video coming out in 3 days, and I feel like it breaks it down way better than I could right now on call. So that'll be on my YouTube, and at 5 p.m. Eastern Standard Time on Monday, that video will drop, and I basically go through every trade in the whole journal for the month. But I just want people to understand that if you're 100% guaranteed to take a 6 trade losing streak in 50 trades, some people get on their live account and they take a 6 trade losing streak and they're distraught and broken when it's mathematically proven that it will happen. You gotta, in most cases, more cases than not, people are just skewing their mental side of things. And I do talk about psychology a lot because the majority of times people don't realize it's working on them, or don't even, it's subconscious actions that affect your trading. Another thing too people will do is they might be very conservative with trades or very aggressive in backtesting, either or. So let's say there's an aggressive trader in backtesting, but then he gets to a live chart and takes these 6 losses in a row. He might start nitpicking trades and saying, I don't like that one that much, I'm going to take this one instead. Or maybe I don't like this one, it's on 100%, I'm going to take this one instead. Technically speaking, that is now skewing your win rate. You may not have a 40% win rate like you did in testing anymore. You could be ending up in the 20% because you're going and picking through different trades individually, and it could extend that losing streak longer and longer. So it's another thing to just be aware of. Just be careful of those subconscious psychological factors that might be working on you while you're trading. And then otherwise, I'm going to look over some student data. So I can start with that, and then if I do have time at the end, I'll go over my portfolio. I just want to make sure I get through his data in the meantime. I will say, analytically, it does not look great with the win rate here being at about 13, and I did briefly kind of brush through it out of my own curiosity before the webinar, and one of the 2 main things I will say, actually I can write it here, but I would say focus on more clear liquidity grabs. Sorry, my keyboard is so loud, guys, if you can hear that. Can't spell liquidity today, apparently. And then the other one was less aggressive ranges, because some of these ranges we're going to look at are definitely fairly aggressive. So we'll start with the wins. I honestly thought, like, this to me is picture perfect for a winning scenario. It's very, very clear. I love when there's these very aggressive sweeps on liquidity, followed by even more aggressive breaks of structure, leaves a fair value around the entry, just below the previous liquidity point, and then a great break of structure. To me, this is like a picture perfect setup. And then some of these other ones are very similar as well. This was marked as a winner. I do believe it would be a break even. Because price tapped in here and then hit break even more than a few times. It's just kind of some very choppy and ugly price. This one here, now this is where, when I mentioned more clear liquidity sweeps, this, however, it might be looked at as a demand zone. I don't see anywhere that it's really sweeping liquidity, and I don't see a very clear trading range here from a low to a high, comparative to something like this, where it's very clear that we have a break of structure, and that puts this low in place and this high in place. And even this one, which is another great one in my opinion, we have a very clear sweep of a significant low here. And I consider lows typically significant when they're breaking some form of structure, whether it even be lower time frame or it's a form of consolidation. So this low does break a minor high here. Typically, in most cases, that is what's going to make it significant enough when I see a liquidity sweep, but also just the fashion of this sweep where it's very aggressive out, and then we come right below that low and leave a fair value gap at entry. This is a great setup as well. So one of the main things I would take away from this is screen cap this one, screen cap this UJ1, and kind of utilize those as, you know, markers. And in your future backtesting, hold this image up and just kind of look at the trades that you're going to be taking and say, okay, does it closely resemble this one that I'm looking at here? Yes or no? And it definitely could help narrow them down a bit. So I'll brush through the break evens after. I typically want to go through the losses and from a minimization factor, see which ones can be cut out of here. If you don't mind me using the comment section, actually, my keyboard's so loud, you guys are going to be annoyed if you hear me type in my essays, but after this webinar, I'll definitely take some pictures or copy and then go through the comment section and kind of write on certain ones how I think they could be avoided or improved in the long term. And one of those things is when I mentioned the clear liquidity grabs. This is a good scenario where, yes, it might look like it took a area of liquidity here, but there's a lack of impulsivity, which is very, very important for liquidity grabs. I talked about when you look at your winning trade that we should use as our benchmark here. Let's actually open this up. I like the very aggressive sweep and the very aggressive break of structure right after, and you can see it leaves behind a fair value gap comparative to when you look at this position here in the loss section. It was fairly aggressive in, but we completely died in volume for what looks like a day, and then very aggressive out. And I typically don't like this type of movement. You want to see very aggressive wicks at highs or lows in price action for a lot higher probability when it comes to liquidity sweeps. So avoid having your stop loss at consolidation ranges. That's a huge, huge one that will definitely increase your win rate substantially. So just keep that in mind. More cases than not, my stop loss ends up at generally wick areas or areas like this where it's just very quick in and out. You know, this one is even a bit ugly, I will admit, which could be why it ends up getting run as liquidity too. But for example, USD JPY, we can see these very quick wick in, wick out movements. Let's look at AUD CAD as well. A very aggressive candle down and then very quickly out. Comparative to something like this where it comes in, consolidates for a long while, and then breaks out. Let me double check chat, make sure I'm not missing anything. All right. And then let me hop back in here. So another one is these very aggressive ranges. I do think these ranges are a bit too small for my liking. Now, don't let me skew you one way or another. If you do want to take aggressive ranges, you can try and test these a little more. But I will say if you're struggling with win rate, which is about 13%, and I think that's fairly low, there's no edge there, I would recommend focusing on larger ranges before trying to be too aggressive with it. So there's that position there that I think is aggressive, and then this one here as well, which I do think is very, very aggressive. There's not really intentional sweeps on liquidity here. And then I also... Sorry, I had to cough. But I also do not like one candle breaks of structure. That's another thing that I found typically doesn't work too well. So it's definitely avoiding those aggressive ranges that I think would show an overall increase on your win rate. Some of these trades as well, I do think are marked incorrectly. This one would be a break even if it was taken the way it shows here. It's a little bit odd because I think another tip that I have, I'm going to write this down too because I think it's very important. I've mentioned it in past webinars, but mark every piece of the plan, every trade. And I think that's super, super important because, sorry, I type so fast sometimes. I make all sorts of spelling errors. Spell check's like my best friend on Discord. But I think it's very important because, number one, it kind of helps you see the quality of things like liquidity sweeps more. For example, if you were to mark everything out in this trade, you would try to go mark a liquidity sweep and then very quickly realize there isn't a very good one here. And I think it's very similar here where I don't know if your break of structure was utilizing this smaller range, maybe this larger range, maybe this liquidity here, or was it this liquidity here? And regardless, when this does tap in, it does reach your 1R break even level. So this would have been a break even instead of a loss. And then this one here, when I talk about ranges, I really do think this one is a little bit more discretional. I understand that, but it is something that has increased my win rate as well, is focusing on a true trading range as opposed to these, like, you know, prices crawling down very slowly here, multiple minor breaks inside of there, and it just doesn't look like a very clear high and low. The break of structure is way up here, if not nearing that 50%, which is another rule where I think price has gone too far. Versus if you look at something like this, it is very clear. It's just a one very impulsive move upward through a nice break of structure. You'll typically see on my charts, I have 3 points marked. I have the break of structure point, the low, and the high. And, you know, typically you're seeing this general model being resembled with trades. However, if the break of structure is here, my low is here, and my high is up here, and it's like, you know, barely a trading range when it comes to the break of structure here, you're looking at, you know, maybe tiny little baby break of structure there and expecting price to come back and mitigate, much, much less likely. So I do think taking trades that have a more established and cleaner range to look at is very important. And that would definitely avoid positions like this where price is just kind of dragging on and low and slow liquidity or volume. This one isn't too bad. I would argue a lack of a liquidity sweep here, but I do like this from a range standpoint. Like I just talked about, we do have a very clear break of structure with a high, the low, and then another high put in place. So I do think it's a good setup. Just not the best liquidity sweep here. And this one, also not too bad, just a bit aggressive, but better than the other ones we've seen. I like the consolidation here and the very aggressive down move before the up move, the break of structure, and then a fair value gap is present as well. So this is a little bit more aggressive than I like to take, but still a good loss. And these ones here are definitely, I definitely do think the ranges can be a bit larger, but we talked about before avoiding areas where your stop loss is resting at consolidation periods with a lot of relative equal highs and lows. And you can definitely see that in this scenario where, number one, there's no liquidity sweep, but number two, it's a lot of lows right here. Maybe 4 candles have a low set here, and then another 3 or so have a low here. And having your stop loss at those areas with a lot of resting lows in liquidity, more likely than not, price is going to be gravitated towards that to grab that liquidity, especially in such a heavy bearish downtrend as well. This one, I would almost argue, is fairly similar, where the liquidity sweep is not very aggressive and impulsive. Now, if this trade were to have a huge wick that came up to here where my cursor is, and then we saw this break, I think it would be much better. But the big difference you want to be able to see here is we come up into the area. Once again, we kind of just stall with low or no volume and then break out. Very similar to this trade I talked about where we come up, stall with low and slow volume, and then break out. These ones have your stop loss at a much more vulnerable area. So I think this one simple adjustment, which is focusing on those sharp and impulsive lows and highs and having your stop loss at a very high volume area, would definitely improve your win rate drastically overall. It could probably bring it to 13 to 25 as is. But then I think focusing on a lot larger ranges as well, trying to avoid these ones. This one I think does a good job with the impulsivity I talked about of the high, but it doesn't sweep any liquidity. So those main things I think are key. It's going to be these 3 general comments. You want to make sure every trade has a liquidity grab. You want to make sure you're trading a little bit less aggressive ranges, trying to take those larger ranges that have all the rules met very clearly. And then, of course, for every trade, just try to get in the habit of marking every piece of that trade. You'll see me do it plenty where I mark the high or the low, the high, the break, the sweep, and the fair value gap. I mark them every single time. And it's my mental way of just taking a checklist and making sure everything is there. Because there is so many trades where I'll start marking it up, and then I'll be like, all right, fair value gap, and there is none. And I'm like, oh, I would have just taken this trade if I didn't just, take the extra second to kind of go through and do that. Some of these other trades, this one here is where we left off. Once again, it's, a general area with a lot of consolidations at lows in a very aggressive range as well, a very small range. However, I will say this one does look like another break even in the scenario. It should have been. Correct me if I'm wrong, if your rules are different than a 1R break even, but a lot of these trades, looks like it should be a 1R break even rule because I'm seeing that in most of these break evens here. But some of these setups like this, I do think should be a break even position too. So maybe it just incorrectly logged or whatever in FX replay maybe. Because this one as well would be a break-even position. I think this one is pretty good. I like the sweep on liquidity here. Once again, these very aggressive bearish and then bullish candles, and a nice, generally a wick or 2 strong candles like this is very, very good to see a sweep on liquidity below a significant low. And remember, as I talked about, the significant low is one that does break some piece of minor structure typically, or it can be a consolidation area. So when I see this low did break a little minor high here, it typically means that there's a lot of liquidity that's going to be below that. A lot of dumb smart money. I've heard the term on YouTube. I hate that term. But a lot of uninformed smart money traders may have their stop losses here because there was a shift in structure. And then they might see a sweep on liquidity in a more significant shift in structure. For those that don't use the candle close rule or look for strong breaks, they're going to be taken out like this. And then you see the actual shift after. taps in, gets you to break even, and then price does inevitably run bearish again. So not a bad position there. Otherwise, I think this is very similar. So I'm definitely, the biggest pattern I'm noticing is making sure your stop loss is at a good, strong, and impulsive area that sweeps liquidity, and you'll see a drastic increase in that win rate for sure. So all of these lows are in the same general area, especially this low and slow retracement towards your zone is a bit awkward, but with all these lows in the same general area, I understand it might look like a sweep because it's very, very faint below this area, but we got to keep in mind most traders are looking at the markets from support and resistance kind of style trading, as well as just general highs and lows of the market. And I don't know about you guys, but when I was a retail trader, I would be all over this as a support line because they're in the same general area. Very few support and resistance traders, people tend to forget this, but they're not looking at individual pips in the market like smart money might be, or they're looking at it with a very inaccurate view. And I think it's important to just kind of realize that they're not sitting there looking at every individual pip and sweep or mitigation like smart money is. If these lows are in the same general area, there's going to be orders resting there, and we will see price gravitate towards them more likely than not. Not too bad. This is a good range. I like this setup. The sweep's a little off here. It could be a little bit more significant, but I do like the range here, specifically the fact that the break is structured. Is this low in it, and the majority of the range plays out well. Didn't quite get to break even, tapped in, came close, and then ran stop loss. I think that's a pretty good setup, though, overall. Some of these I do think would be break evens. Like this one would definitely be a break even as well. So I don't know specifically if I don't know specifically how the break even works on FX replay, but if you're using it and it's maybe incorrectly logging it, it's definitely going to skew your data to make it look much worse because there's a lot of break evens I'm seeing in here. So your win rate is definitely not as low as this might claim it to be, 13%, because I do think a lot of these would end up in the break even section as opposed to the straight up loss section. Once again, your stop loss is resting at some relative equal lows here. And more likely than not, we're going to see price run through that as liquidity. So despite it having some of these other rules met, I really, really think the liquidity rule would be a major help for you. And then this one as well, kind of a similar scenario where we're entering at consolidation. But once again, we talked about the range-based trading, and this one doesn't really have a break of structure present. And without the break of structure, you can't really trade a range. So I definitely think focusing on those more significant and clear breaks of structure are going to be much better. For example, this one here, if it didn't have the equal highs, I think it's a very clear break of structure at least, which is important. But once again, some equal highs at your stop loss, which is why you might see price more likely to be, I guess, drawn towards those areas. So we can see a similar scenario here, stop loss at some relative consolidation. So definitely, I think that's the biggest thing, focusing on those very clear liquidity sweeps. I want to make sure I don't miss any questions. 1 RBE, okay. Yeah, I'm assuming, I was just looking at a few different equal highs in those previous ones we just looked at. So yeah, I would consider a lot of these even are generally could be considered equal highs too in my eyes. I think the thing about liquidity sweeps is you need to look for that impulsivity, and you need to look for the consolidation to be cleared out. So when I look at something like this, there's a high, a high, a high, a high, and a high, and all three of these are far too close, and even this one are far too close for me to assume that any liquidity was taken out here. Because if I go and draw a fat line like a support and resistance level, I wish I had a tool to draw on this chart, but if you imagine my cursor as like the highlighter tool and you just draw a straight line, they're all going to be bouncing off of that. And as we know, support and resistance traders are all over that, as well as just large-scale institutions in the market may see price reacting off a certain level and bouncing bearish a lot. So they go and put a ton of sell orders there. That's how liquidity works. And then price is going to be driven to consume those orders. This one's not too bad. I like this one a little bit more. I like that we came just below the low. Didn't spend too much time below that low for the sweep of liquidity, which is good. Sometimes a little bit more impulsive is better, but definitely improvement with this trade. I like the sweep here, and the break was very aggressive as well. But obviously price wanted to reverse and follow that higher time frame bearish trend. So nothing too bad there. This one, not too bad either. I like the break of structure here for the range. I think this is a pretty solid setup. And like I said, I really think I would recommend saving this image, but marking up the rest of the pieces to it. So the sweep on liquidity here, the break of structure, the fair value gap at entry, the 75 fib, making sure every piece of every trade is marked up is going to definitely be an increase to your win rate overall in general. And then here we are at the last few here, and we're actually just about ready to wrap up the webinar. This one is one I really like. Despite, yes, you did get swept out by some form of what looks like news here, and you can kind of see why. We have a low here and a few equal lows here, which is against your ability, obviously, because you were already in the trade, so I wouldn't worry about that. But what I do like is this consolidation where price is very, very sideways with almost no volume. And then if you mark the low of that range and the high, you could see we push out all the liquidity lows of this whole range. So all the orders that rest at all these general lows get pushed out, and then a break of structure that's very aggressive to the upside. I really like this break and shift. I will be honest, the reason this probably lost, I don't go into too much detail with news and stuff like that, but in some cases, large-scale news events like this are simply a catalyst to grab liquidity and then drive price in their intended direction. So if they wanted to push euro pound bullish, regardless of you having a great setup with liquidity cleared here, this news event more likely than not is going to target the highest liquidity point in the market or generate liquidity, grab it, and then run. So wouldn't be too upset about this loss. I still think it's a great one. And then this one, also not too bad either. I think the low is definitely lacking impulsivity a bit, but I like, once again, how we have this consolidation, nice low and slow consolidation. Price comes through that area, grabbing the liquidity in the consolidation, and then breaking structure higher very aggressively. I also think if you mark your liquidity sweep, you would find that your fib should be drawn to this low, not this one. And the reason being is in all of my trades, you'll see the low that sweeps the liquidity is the one where the fib should be drawn from. So I can find a better example. Here's one, I guess. This is my liquidity that I marked up, and this is the low that swept it. I do see some people, they end up trying something like this, but you got to keep in mind, this is not the low or the pullback that swept your liquidity. That's another reason why marking every piece of every trade is very important too. Overall, though, these things are going to be your main focus, I think. More clear liquidity grabs. Remember, liquidity grabs should be impulsive and very aggressive. So I will save this trade in here too, because I think this is one that you should, number one, go through and remark the pieces of each one. But I do think this is a great setup that you should kind of be following and using to minimize some of these losses within here. And the other one is avoid your stop loss being at highs or consolidation areas. Is there any questions that you guys might have for me? Because we're just about ready to wrap up here. Any trades you want me to look over to? I know we already went through some of them, but all good? All right, well, if not, then I'm going to wrap up the webinar here. I'm probably going to have to edit this one a little bit because I want to cut out the whole webinar. We probably spent 10 minutes trying to figure out the webinar channel situation. So it might take a little longer to get uploaded for this one. Give it maybe 30 minutes or so, depending on how long it takes me to render it. But should be all set, guys. And thank you for joining in. And I appreciate you, and have a good weekend too. Stay safe, everybody.